We're back. We're back. Nothing can stop us now. Not weather, not planes. We're back. So while I wait for many thousands of people to join us here, I'm going to go look and see what's news. Da-da-da, da-da-da. So let's see here. I just looked at, I got an email from Yahoo, but then it sends you to Yahoo News, which is just like a hodgepodge of stuff here. Earnings. Starbucks sells majority stake in China business for $4 billion. I know someone will be interested in reading that. I bet that'll probably have somewhat of a positive impact on the stock. Boyu. That's right. Boyu Capital. Oh, go Boyu. Yep, they're going to be up in there. Together, we will write the next chapter of Starbucks' storied history in China, forcing people to drink coffee that don't drink coffee. Okay. All right. Interesting. Starbucks has deep roots in the region. Yes, because Chinese people have been drinking coffee for years. Okay. I never understood the move for Starbucks going into China. It made absolutely no sense. It was just like bizarre. But hey, selling the steak. All right, that's good stuff. Looks like people are popping in. Lovely. Lovely. All right, so we'll stop sharing. Womp. What's going on in the chat, y'all? What's going on in the chat? Oh, early bird gets the worm. Can you explain HIMS numbers and your thoughts and opinions on HIMS? Oh, nice. We got GOAT financial modeling teacher. What? Yeah, so I haven't looked at the recent HIMS numbers, but let's go take a look. Why not? All right, HIMS. After hours, they ripped. Notable growth, 49.2%. Yeah, might as well help share the old screen there. Yeah. Let's see. We're back. We're back. All right. Whoa. Hims and Hers Health is experiencing notable growth, 49.2% year-over-year sales increase to $599 million. Company stocks surged following news of negotiations with Novo Nordisk for a potential deal on Wegovy, a weight loss drug, which could open new revenue streams. That's kind of old news. I thought that was like already known. Oh, it's powered by Yahoo Finance AI. Watch out. Shares surge, negotiating a deal with Novo Nordisk. Yeah, it's ripping after hours. I mean, it had gotten kicked in the teeth. Let's see what Stock Story says. All right, let's see. Q3 sales, top estimates. Okay. Oh, next quarter's revenue guidance, less impressive, below estimates. Womp womp. GAAP profit was, See, this is bizarre, right? At the end of the day, revenue is what you make, net income is what you keep. I say it all the time on my videos. So GAAP profit of 6 cents per share was 43.7% below analyst consensus. So let's think about this. Like, let's really be analysts here. So they topped revenue expectations. Now, we're not told what the revenue expectations are. All we're told that 599 year over year. Got it. So the guidance is below estimates and the profit is below estimates. Okay, so they all right, big beat here. 3.3% on revenues. So I love how they focus on the 49.2, but then it's only a beat by 3.3 and they completely whiffed on the EPS. Okay? Adjusted EBITDA 78.37 versus beat by 15.2. All right, that's good. EBITDA revenue guidance for Q4 below analyst estimates. EBITDA guidance below analyst estimates. Operating margin 2%, down from 5.6%. So I don't see like the oh my gosh positive here. In fact, I would say like this is not good. All right, so let's take a step back here. So this is hims and hers health because it can't just be hims. All right, so revenue beat by 3.3%. Okay, again, this is a growth stock, so that's not like an OMG kind of number there. They totally whiffed on EPS, 43.7% miss. Now, in reality, it's 5 cents, so I kind of get that. Adjusted EBITDA 78.37 versus analyst estimates of 68.04. Okay, so that's good. All right, so we've got, I would call the revenue neutral. So we got neutral, bad, good. Revenue guidance below analyst estimates, bad. EBITDA guidance below analyst estimates, bad. Operating margin down is only 2%. That's like paper thin. Down from 5.6%, bad. Free cash flow margin 13.2, down from 19.8, bad. Customers 2.47, up from 2.44 million. Yeah, that's an increase, but that's like infinitesimally small. So we've got like neutral, bad, good, bad, 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 and then like barely growing. So I mean, me personally, I don't see this as like an OMG kind of thing. I think the Wegovy piece is what's really driving it. But let's continue. This quarter, we continue to prove that our vision of helping tens of millions of people around the world access best-in-class personalized care from the comfort of their own home is more real than ever. We're building a platform that gets more personal, more proactive, and resonates with more people as we scale. Okay. Originally launched with a focus on stigmatized conditions like hair loss and sexual health. Yes, those people are lepers, right? They're thrown out into the wilderness. Like, okay. Operates a consumer-focused telehealth platform. Yes, we're aware. Huh. Yeah, see, the problem with high growth businesses like Hims is, the expectations are that it's going to continue to rip. And then once it doesn't, like all hell breaks loose. So I'm kind of like unimpressed by those numbers, to be quite honest with you. Like they barely beat on revenues. They had better EBITDA, and then everything else was atrocious. So I don't see how that's a positive. And the Wegovy thing, like I'm not having deja vu. They they had negotiated that, then it got like pulled back, and then they were compounding. So like that's not actually something um, new. So that's kind of interesting. I would say like that's like a net negative. It didn't like wow me, and their guidance is down like moving forward. So I'm surprised it's up after hours. It's kind of surprising there. Um, let's see. Yeah, we need to get intro music. I do agree, Pratouche, 100%. Yeah, we need intro music, no doubt. Working on it. Um, all right, here we go. Switching it up. Public markets. Would love to hear about your journey as an entrepreneur, how you chose which business to get into, and any takeaways for someone looking to do the same. Absolutely. So I would encourage everybody to engage in entrepreneurship. That could be freelancing, like offering your services in the market. That's entrepreneurship if you want to kind of like dip your toe in the water. Now, like the most extreme example of entrepreneurship obviously would be actually buying a business. You will learn more about companies, markets, corporate finance by buying and running a business than you ever will from reading any book. And the cool thing is you'll be able to see firsthand that when you control the business, you can do things to boost the business. You can advertise, you can offer deals. So my journey, I'll give one example, so the pizzeria I did not run. So that was a lesson that I learned, like when somebody else is running the business, a lot of things can happen, both good and bad, mostly bad. But I ran the laundromat, And there's a lot to learn with a business like that. The appeal of both of those businesses is the fact that they are cash businesses. Okay. I would say the pizzeria, you have credit cards with that, but cash businesses, which is great from a tax perspective, although you do have to be very careful. It's not like cash, like you could just rob the place blind, not like that. But cash businesses that are very high margin, and they're very simple, like very simple, very straightforward, the type of business that you could absolutely scale. What happened with me in the laundromat, I came to kind of like a crossroads where I, it was like right before COVID, I had this like epiphany and I was like, I either need to A, buy like 10 of these, or B, sell this one and move on. And I basically came to the conclusion, I'm going to sell this one and move on. And then COVID hit and it was like, boom. Like I had already sold the business. Amazingly, I made it through COVID, which is just shocking. The broker that I sold it through, he said like none of the deals that he had survived COVID except for mine. So that's quality business, blah, blah, blah. But the interesting thing is there's a lot of sexiness with like entrepreneurship. And I think when people think entrepreneurship, they think like tech business. That's what I think, software, SaaS. Ooh, it's sexy. But like laundromat, nothing sexy about a laundromat. You're going there at 5 o'clock in the morning, you're sweeping, idiots are like doing dumb bleep, as you can imagine, throwing stuff that like makes no sense into the washers and dryers. Someone had like nails in their pocket, like scratched up the whole thing. I mean, you're dealing with the like lowest common denominator of human being. But it actually taught me that what I really wanted to do was focus my time, effort, into what I'm doing right now, which is YouTube, online businesses, like as much online as possible. Because what I realized was there's a limit to the number of people that I can have in my laundromat at a given time. Okay. Like legitimately, like there's a max capacity. I have a buddy that owns a bar. I have a buddy that owns a bagel shop. And I've asked them, like, what's the most number of people you can have at a given time? And they're like, ah. So, like, if it was like fully, like, everybody and their mother is in there at the same time, you could figure out what the maximum amount that you could make from that business. And it's never at full capacity, no matter what business it is. So then you say, like, okay, back up, full capacity. Would that like wow you? Probably not. And you're not going to get like wealthy off of like a laundromat. You're going to have probably I mean, it depends on the laundromat, but anywhere from like 40 to 70, 75,000 net. But I mean, when something goes sideways, like you get the phone call. And it was so funny when I was selling the business, somebody was like, why don't you get a manager? It's like, you dummy. Like, I'm making like 50 from this thing. What do you think I'm going to pay a manager? 50. Like, then you make nothing. It was just like, you deal with people that don't even understand what the hell they're talking about. But the cool thing about the laundromat business, you can get 100% financing on the equipment. That's something that's pretty unique. Very easy, simple business to understand. I'll give a shout out to my buddy and mentor. If you're interested in the laundry business, Danny D'Angelo. Danny D'Angelo. Okay. He's from Brooklyn, lives out in Arizona. Absolute master. So if that's a business that you're interested in, I will give the shout out to Danny D'Angelo. Amazing. I think it's cleaning up in laundromats is his DVD that really got me diving deep into it head first. But I think one of the things that's very interesting is where I grew up in New Jersey, there was a guy who has like a really, really successful pizzeria business. And it was interesting. I talked to him after buying the pizzeria and I was like, what's your advice? Like, if you could do it all over again, what would you do? And one of the interesting things is he told me, he said, I would buy pizzerias that were not performing well. I would basically get them to perform well and then sell them and hold paper, meaning offer seller financing. And he's like, that's what I would do if I could do it all over again. And he's like, if they fail, you get it back and then you just do it all over again. And I was like, that's interesting. So that was like somebody who's been in the pizza business for 40 years, literally told me firsthand. That was his advice. So you could take that with a grain of salt. But what's interesting, I get like the Instagram algorithm is very interesting on my phone, so I always get like entrepreneur stuff. And there's that kid that goes around and like, like randomly runs into billionaires and he's like, "Hey, could I ask you a few questions?" And blah, blah, blah. And he talked to Jimmy John, who sold the Jimmy John's franchise for $3.5 billion. And it was very interesting. I'm always fascinated to like hear true entrepreneurs and how they talk about things. And it's like, there's nothing unique about a sandwich shop. There's Subway, there's Blimpie, there's all these places. But what he said was he wanted to create an A business, like a grade in school, in a B or C location. And the way that he realized was he could do delivery. And it was the Freaky Fast. And that's how he turned a B or C location into an A location, was through what he made with delivery. So that kind of like, because he was going to lose the business, he had like a bunch of underperforming franchises. He also said the mindset of the franchisees, you have to like put in 110%, be willing to work 7 days a week, 80 to 100 hours a week. And that's the other like secret, is there is no secret. You have to work hard. You have to put a lot into it. But that's why you need to find something you're genuinely interested in. I was interested in like the business side of the laundromat, but there was a clog in the drainage pipe, and I get a call that like all the water is like coming up in all the machines, and I'm like, close all the doors, I'm on my way. That type of stuff is just like such a pain in the what. Now, I can count in the 5 years that I own the laundromat, I could count on like one hand how many times that happened. But when it happens, like you're literally dropping everything and like, you've got to head there and fix it because all hell is broken loose. So that's what I would say. If you're going to do it, like mentally say, I'm going to do 10 of these. I actually know of somebody who I'm close with who has car washes in New Jersey, and he made his money in distressed debt and decided that like he was bored because he had retired. So he's like, what am I going to do with this? So he started buying car washes, fixing them up. And his whole mindset is there's a dislocation because he has an advantage from a financial analysis perspective, and he could fix the places up and make them perform well. And his ultimate goal is to wrap them up and sell them to private equity. So that's not a bad idea. But there's a very inefficient market in the private business space. So there's a lot of money to be made there for sure. Ooh. Okay, back to public markets. Wah, wah. Okay, hold on. So hopefully that was sufficient, Adams. Hi, Ken. Curious to get your take on a tidal wave of media calling current conditions a bubble. Yeah, I saw that. And then there was something I saw. I was like, Andrew Ross Sorkin has been researching the Great Depression. Like, oh my gosh, Andrew Ross Sorkin, really? Like, sometimes like I wish you guys could see, but I should get like a hidden camera like when I read some of this stuff, and like it makes my mind melt. So is there an AI bubble? Yes and no. Let me explain, because the next question that was asked was about Meta, so it'll lead us right into that conversation. If a company, like if we all started like tonight, we came up with an idea, let's start an AI company. It's like, it's going to get a premium valuation, even if it has like no logic or sense to it, because it's AI. So it's like dogcrap.ai would be like a great company. Why? Because it has AI in it. So if you say anything, you're like, yeah, and we use AI. Like all of a sudden, it's like, oh my gosh, did you hear what he said? He said A and then I. It's just that, to me, there's a bubble with that. Like, too many people. I was having this conversation earlier today with a friend of mine who's a doctor. Like, everything is just like bananas with AI, where it's like overhyped. Okay. I'm like totally done with the overhyped AI. Like I have students and it's like, well, AI is going to do that. It's like, okay, AI is not doing it right now. You need to do it. Okay. Like this idea that like there's no more jobs, everything's going to be gotten rid of because of AI. It's like, who's going to tell the AI what to do? It's like, well, it's going to be super intelligence. So it's going to tell itself what to do. Let's pump the brakes for a second, folks. Like going back to the internet when it first came out, like the mid 90s, definitely revolutionary, no question. But like you still have to go do the search and the research and all of that stuff. Now, AI is taking it to a next level. So it's actually going to do some of that research for you and simplify things. It's like great. My personal experience with AI, it gets you to a better starting point, but it doesn't remove the need to like check numbers, see where stuff comes from, make sure it's correct. I have a very good friend of mine who's a director at Morgan Stanley, okay? And he was telling me that they were meeting with a company and they had a discussion for 25 minutes on one number. Okay. This is my premise that AI is not going to remove all of you, me, from the financial services world. Robo investing has existed for well over a decade, and people aren't just using robots to invest. So there's certain aspects where like humans are always going to be needed. Where like we could just remove humans, huge fan, like trade settlement in finance. Yes, that's something blockchain and AI should just do away with. The idea that I sell a stock and then I use the proceeds to go buy another one, and I can't sell that stock because the previous trade has to settle. That to me is madness. It's insanity. Okay, so let's take one thing at a time. There is like an overhype with AI where like any company comes out and they say AI and it's like, oh, premium valuation. Yes, but when you look at Meta, Amazon, Nvidia, like all of these Mag 7 companies, Tesla as well. These are the few, Microsoft, these are the few. The one exception, ironically, is Apple. Nobody knows what the hell they're doing with AI. But all the Mag 7 can show a demonstrable impact via AI. Like we've spent this much on AI, this is what came out the other end. So, from that perspective, not a bubble. All right. I'm going to rely on the Mag 7 to drive the narrative with AI. I'm not a fan of like unproven companies. It's like, could you check out this company? It went up 80% in one day. What do you think about it? It's like, I don't know anything about it. There's no information on it. It seems to me like a complete anomaly. I wouldn't invest in it. That's like the typical response when people, ask me these types of questions. So I would say no. There is not an AI bubble as it pertains to the Mag 7. Now, I know they're trading at premium valuations, which leads us to the next question. Bingo. Can we talk about Meta? What do you think for the long term? My position has not changed. Okay. Like, I thought it was a buy. And again, this is not financial advice, consult a financial advisor, blah, 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 blah. But my educational video, friends, it was at a massive discount when I ran that video. Now it's at even more of a discount. So do the math. The fact that it's like below 650 is like wee oo, wee oo, wee oo. If you're going to ever own Meta, like this would be a very logical no-brainer entry point. The funny thing was I had somebody on the channel, which I always love. They're like, Meta's down. You're wrong. And it's like, yeah. The whole channel, just for anybody that's here right now, friends, the whole channel is about investing, in case you haven't noticed, not trading. So I said to the person, I said, reach out in a year. If Meta is below, I think it was 648.35, I'll give you $100 and you can screenshot this. Boom. And I would say that to anybody because it's like, when these types of things happen, these are opportunities. Liberation Day. Like that's when I got into Meta. I was like, holy bleep, this is ridiculous. It's below 500. Now, if I were to offer you right now, buy Meta below 500, you'd be like, yeah, of course. But now all of a sudden when it's below 650, it's like, I don't know. This is where like the professionals, the savages of investing take advantage because other people are sitting there, well, I don't know. I remember a ton of people that I was talking to with Liberation Day and the tariffs. They're like, yeah, but it could go lower. That right there is like the kiss of death of investing. It could go lower. Yes, a lot of things could happen. It could also skyrocket to the moon. So this is why we ultimately dollar cost average and we don't just like pile in like this massive position. Um, so yeah, Meta is like, you know, what happened was they said we're allocating even more towards CapEx via AI. It's like, okay, I don't personally see anything wrong with that. You know, it's an arms race right now. It's like, you know, those who invest are going to benefit and those who don't won't. The crazy thing is like when I did the Microsoft video, it's nuts how much they already have going on. I mean, it's just like absolutely bonkers. They have numerous data centers, like massive ones all over planet Earth. Like that's the part to me that is like really fascinating, frankly. So that's what I would say. Like, if you're interested in any of the Mag 7 right now, out of all of them, Meta is the one where it's just like, are you kidding me? The rest, it's like, eh. But Meta is like, it's like Christmas just came early or whatever, you know, fun holiday you celebrate. So that to me is just like total no brainer. Remember, folks, 98% of their business is advertising. Come December, they are rolling out AI advertising. Now, again, I went on my whole diatribe about AI, you know, overhype, blah, 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 blah. But hold on a second. Let's say I'm searching for, I'm like looking around the room, a book, okay? I'm searching for a book. I would like a book on business. And I start like typing what it is that I'm interested in, you know, laundromats, okay? I was talking about that earlier. And now, this is wild to me. AI is going to create an advertisement and put it right in front of you. So it's like, oh, you want a book on laundromats and entrepreneurship in laundromats? Boom. Like it will literally create the ad real time. Now, this to me is like next level game changer. It's rolling out, I think they said December 16th, ironically, right before the holidays. Go figure. So, like, that is something that I think will just be an absolute game changer. Whatever you're frustrated with searching on, they're going to be able to literally craft an advertisement in real time that's going to be custom tailored to what you're looking for. I mean, conspicuous consumption like bananas. Like, that to me is crazy. That is absolutely crazy. So, that's something that is coming and they dominate advertising. You know, I've done ads before, but like it's usually one off. It's not like a consistent thing. So for me, like I have a lot of friends who are like entrepreneurs in the online space, and they're like, dude, best bang for your buck, Meta, 100%. Like best targeting, best information all across the board. So now they're going to add AI into it. Dude, I just think stupid, like absolutely stupid. Total game changer. All right, moving on, friends. Hi, Ken. I've invested in Celsius. Congratulations. When we were talking about it one stream late in the summer, don't know if you remember, but do you still have the same views on it or not? Why? Yes, my views have not changed on Celsius. So, like, let's step back and then step forward. I know they're reporting, I think it might even be tomorrow. Actually, I put it in a note because I've been updating what videos I'm going to do on the channel. I do remember this one specifically, so just bear with me 1 second because I want to see when they report. Okay, Celsius is the 5th, so they're on Wednesday. Celsius. So Pepsi reinvested more into Celsius. It was basically like a switch. Basically, they said, we're going to invest another, it was some crazy amount, $500 million into Celsius. And then in turn, they sold Rockstar North America to Celsius. So they basically, and they sold it for the exact same amount. So that was kind of like, you know, just like shuffling. But Alani Nu got added to the Pepsi distribution network. So you have two things going on there. One, you have Rockstar. Two, you have Alani Nu getting added to the Pepsi distribution network. That's the first that's happened. So I'm very bullish right now on Celsius as a result of that. So that personally is why I'm positive on Celsius. When we last looked at Celsius, we had a $70 valuation. And I remember when I released the video, it was like 59, 58. So it was very close to being a buy, or it was a buy when I released it, based on a 20% discount. So my opinion hasn't changed. I'm actually excited to see what Celsius reports, because Alani Nu is really the growth engine. And Alani Nu is really where, that's where the pop is going to be. Also, I like buying Celsius when I go to the grocery store, and I haven't seen it like being able to be kept on shelves. So that I would say is a positive, but they're reporting on Wednesday. So yeah, my view hasn't changed on Celsius. What businesses are not too capital intensive that you think are worth looking into? Honestly, it's like where I'm at online. So if you can figure out something that you are knowledgeable on, I mean, this is like online business 101. I got my I was talking about books over here. Wait for it. Hold on. Oh, $100 million models by Alex Hormozy. Free advertisement for him. Not that he needs it. I've got 12 people in my live stream right now. But that goes through like everything that you would need to figure out what business would be good for you. But so capital intensive, just so we're clear, capital intensive is like actually buying machinery, right? Property, plant, and equipment. Every business is going to require some sort of like money. So I could tell you with like what I'm doing, you need like a website, right? You need hosting, some sort of like email. I have like a Gmail account, and then the cloud with that. So that's like $50 a month. So you have to start kind of like figuring out what those are. And if you're interested in YouTube, I can tell you like it is a slog. All of you who've been on the channel for long enough have seen like it takes a lot of time and effort to grow. I'll release a video, it'll just like rip. I'll release another video, it'll flop, like Tesla this past week. Total flop. That's probably because somebody downvoted it within like the first 10. I don't know who it is. Like somebody on the channel just like hates Tesla, which is fine. That's fine. That's like your right as a human being. I don't understand that though. It's like, watch the video. Like you're judging me. I spent, 30 hours producing the video, and then it like craps out because some clown is like, don't like Tesla. It's like, there's a lot of things I don't like in life, but I'm not going to like, throw a fit over it. So that's the problem. So I would say something online would be your best bet. But have something that you're passionate about. I have a genuine interest and passion with this. I could talk about stocks and finance and investing all day, every day, and twice on Sunday. But there's a lot of stuff that's out there that I wouldn't get too like down the rabbit hole, shiny object syndrome. I mean, dude, I've like looked at frickin' everything, publishing books, um, uh, all sorts of different Bitcoin stuff. It's like you have to have a genuine passion, the idea, and you're just going to have to commit to something. I would say that would be the other thing. So, buying a small business like pizzeria, laundromat, that type of stuff, that's going to definitely be more, capital intensive, i.e., require thousands of dollars. So I would say anything where you could put in sweat equity, something that you're genuinely passionate about, that people want to hear your opinion on. That's what I would advise, just starting online, and start simple. I've heard people build like these crazy businesses off of like a $97, like PDF, and they just build a crazy business out of that. So that's what I would say. That's what I would say to look into. I know that's pretty vague, but there's no like specific business where you wouldn't have to, invest. You're going to have to invest time, that's for sure. But that would be the least capital intensive option. What's up, brother? Good to see you too. Nice. Love that. Oh, yeah, I just covered Celsius. So just be careful. Like, I don't know if there's going to be like any like crazy like earnings, like bonanza, but you know, Alani Nu got added to the Pepsi distribution network. That has to have a positive impact. They also acquired Rockstar. So, like, those two things alone are going to have a positive, like a significant positive impact. So, I'm anticipating like good results are going to come from Celsius. And I would say in general, people are still getting jacked up on energy drinks, myself included. So I would anticipate positivity there. I'm really curious to see what the impact is of Alani Nu being in Pepsi's distribution network and Rockstar. So just full disclosure again, guys, Wednesday, the 5th, that is when Celsius reports. So we'll be on top of that. Follow-up question, private markets and your laundromat and pizzeria. Did you put all of your own capital, get a loan? Thoughts on strategy here. Also, how'd you find the business? Internet? So, great questions, by the way. When it comes to a laundromat specifically, what you want to do is you don't want to build out the laundromat. You want to find one that's underperforming that already has all the infrastructure. Then what you want to do, ideally, again, this is ideal, you want to negotiate directly with the landlord, not with the owner. Okay. If you found like an abandoned laundromat, that would be a gold mine. You go to the landlord and you say, look, dude, I need to fix this place up. I need 6 months free rent, but I'll sign, a 10-year lease, 2 5-year options. That would be your best bet. So you get the free rent. And then you are going to have to, definitely get like some sort of loan if you don't have some capital saved to fix the place up. But I had a home equity line of credit that I used to do the build out for the business. And then I did seller financing on the acquisition of the business. So you want to get creative on the financing piece. Otherwise, you have this cash that's allocated and it's like, what do I do here? So I would say like a line of credit would be the right way to go with any business. So line of credit, seller financing, stuff like that. The reason why seller financing, if you fail, it goes back to the seller. So you don't have to like worry about trying to sell the business and stuff like that. Your mindset should be that, it's not going to fail. But that would be the idea there. I wouldn't just use cash. I would definitely use seller financing, as well as some sort of like line of credit. You could get a business line of credit like for up to $25,000 without doing like major headache. Like any major bank will give you up to $25,000. They call it no doc. But anything beyond that, then they're going to want documentation, proof of income, all that stuff. Thank you, Sean. Appreciate you, brother. Yeah, this one's a good question here. Thoughts about PayPal. So PayPal, it was funny. I got a text from one of my coaching clients, and he's like, PYPL. I like almost crashed my car. I'm like driving on the highway. I'm like, what the fudge? So then I looked. I was like, oh, okay, great. Dividend, beat estimates, AI, like all this great stuff. And then it just like whoop, went back down. So that one's kind of baffling. It's like there's like a lid on the stock. That one I can't figure out. I'll just be like brutally honest. I didn't see where it closed today. I'm gonna check real quick, but it was just bizarre. It like popped and then it just like came right back down to earth. It was like really like borderline freaky. Yeah, so it went to 78.56 and then just like went right back down. It was like, yeah, we're done with that. So I don't think there's like a short position on it. Because I remember looking when I did the video. That was just bizarre. Like I don't know. So it's still undervalued. The valuation's probably higher than when I last covered it. There's just a bunch of other companies that I want to cover before I go back to PayPal, but makes no sense. Like they're like a lot of investors have been like, pay a dividend, and they're like, okay, here's a dividend. They also announced a lot of work that they're doing with other companies, AI, blockchain, all sorts of stuff, and it was just like really positive, and it just like crapped out. Like that one, it's bizarre. But again, it's kind of like Albertsons is another one. It's like, what the heck happened there? you know, over time, so that Warren Buffett's mentor, Benjamin Graham, said over the long term, the market is a weighing machine. Over the short term, it's a voting machine. What does that mean? Over the short term, stock prices change based on market sentiment, what people like, what people don't like, etc. Over the long term, it's cash flow, it's valuation. That's what's going to matter. So, I look at Albertsons and it's just like a complete anathema. It makes no frickin' sense. I've owned that thing since before the Kroger deal announcement. I think my average price is like 19 and change. Or no, it's 21. It's 21. So I own it at 21 and it's like down to 17.50. It's totally baffling. Now, the tendency is gotta sell. It's actually worth like 28, 29 bucks a share. So it's like it has 60% upside, but you're like sitting there, you're like, I got to invest in something. No, just sit back, and over time, the valuation will definitely bear out. What do you think about JD? JD. That's a good question. I don't know what I think about JD. Let's see. I have not looked at JD before. Let me make sure I've got the right one. JD.com. Yeah, I haven't looked at this one before. I'm just going to pull up some info. Uh-oh. I actually kind of like this Yahoo. I know I crapped on AI earlier, but this little like Yahoo feature that they have in the little news area. I just noticed this. This is great. JD.com is expanding into Southeast Asia while facing challenges, including subsidiary losses. Analysts consider the stock undervalued, with strong earnings potential supported by positive ratings and recent partnerships in robotics and logistics. So that's what I think on JD. Let's see what Finviz says on JD. Hold on. I'm going to share this. Stop share this. Share something else. Yeah. And don't worry, friends, I'm going to come back to everybody's comments. Lively chat. We had a couple weeks. We had a nor'easter, and then we had the AWS outage. I literally had I was 45 minutes in. I'm like, wow, the chat's dead. It's like because nobody was there. So I had 45 minutes and just and none of it got uploaded to the cloud. Anyways, back to our friend JD here. So target 43.65 on 30 something, 32.78. So this is the target right here. And then I'm a huge fan, by the way, of Finviz. People say like, what are free resources that you like? Finviz would be up there. These are old downgrades. So Citi resumed at 42. So that's definitely a 20% discount. And then Arete went from sell to buy 41. So I just don't know enough about it to say I'm positive or negative on it, but just figured I'd give you some info. Your supporting video clips on the Tesla video are on point. Thanks. I mean, I don't think people realize, you guys realize, but the amount of work that goes into creating these videos is insane. I know people just think, oh, AI. It's no, dude. I literally spent the whole bleeping day today, manually going through numbers. Now I know what people are thinking about AI. Dude, you have to understand, if you don't have the ability to articulate where a number came from, why it's there, etc., you're smoked. You're done. And the problem is if you just give all the agency to, AI or whatever. By the way, AI sucks when it comes to numbers. It's an LLM. It's a large language model. But yeah, it's a real pain. The whole thing with Tesla, because some of the comments were hysterical. I still don't understand this, been in this journey for a few years now on YouTube, where people get personal offense at a YouTube video that it's a stock. If you don't like it, don't buy it. I don't understand. You have to recognize what Tesla is doing right now in terms of its transition. This is Amazon going from a bookstore to what is today Amazon, online e-commerce. That's the revolutionary transition that's going on right now. If you don't believe in self-driving cars, humanoid robots, robo-taxis, all of that, don't even go near the stock. Don't even waste your time. Okay. It's not about the electric vehicles. I think the energy generation and storage part of the business is a really fascinating story that gets very much undercovered, but you have to believe in the long-term vision. If you don't, if you think like, oh, this is unproven, da da da. Someone had like a really like nasty comment, like super snarky. I'm like, take, I'm not a doctor, but take 50 chill pills. Why don't you overdose on chill pills? But they were like, their self-driving car technology is bad. The robots, there are no robots. It's like, okay, dude. So like, if you go down to Austin, go to the headquarters, like there's robots all throughout the frickin' place. Now you can't go buy one right now, but they're testing all the frickin' robots. Like robots are literally delivering people their cars. Like no joke. So it's like I just, if you don't believe it, it's like that's fine. Don't invest in it. Go invest in Ford. I just like I get it. It's hysterical to me. Like when people are like, oh, it's like, okay, don't invest in it. I don't care. Like, I don't see the people that are on the other side. Like, they're like, well, I've got a thing to tell you. It's like, all right, easy. Like, get off my lawn. Like, okay, like just don't invest in the stock. Chill out. I don't get that. All right, let's see. Leon. I've looked a lot into InPost. It's a Polish e-commerce brand that has spread to other countries. The stock is really cheap right now. Think you should look into it. ID 669. Okay. Now, what I would say is these are the types of things that could go like really, really well or really, really badly. And I'm assuming, and again, I'm just totally speculating here. I'm assuming that you have some sort of like intel, subject matter expertise, locational expertise. I am fine with that. Where I have a challenge, because like I've gotten smoked in China over companies where I'm like, oh, this is a total no-brainer. And then it's like, I'm not physically there. I can't physically see it, touch it, transact with it. So like I've gotten burned in that regard. So what I would say is like if you have the inside scoop, your friends, your family, etc., and you're like, they all love this, they all use this, then by all means move forward. But again, it's all about the fundamentals. And what you'd have to say is this a business that has the ability to expand like all throughout Europe? Or is it just going to be this like small localized thing? That is what I would be very curious about in that regard. That's what I would be like really wanting to know for a business like that. Also, like from my perspective as a US based investor, we've got the Polish zloty. Yes, I know the currency. That is what you have to be cognizant of as well is the translation effects from like an ADR that's in dollars, assuming that they have a US ADR. But investing directly in another country, that's a whole other ball of wax. There's major tax implications and insanity that goes on with that. So if there's no ADR for it, it's even a tougher argument. But I will definitely put it on the radar and take a look. Not sure you've already touched on this, but your views on the Kenview deal, how to view special situations, hedge funds, look at these sort of arbitrage. Would you take the bet? So Kenview is the whole Tylenol thing. I've not kept up with it since you would think I'd be a big fan of the company since it has my name in it. But I have not, up 12.3%. Kimberly Clark to buy Kenview. There you go. That's interesting timing, I would say. Very interesting timing. Now, I'm looking at here. Why don't I do that? I'm doing it all on my phone. Like, go figure. So let's go look up Kenview together, friends. And I think we all know the story of what happened. So hang on. Kenview, Tylenol, the stock has absolutely ripped. They're being bought out now, apparently, by Kimberly Clark. Kim Clark. All right, let's see. All right. So up 12.3%. We don't want the 1 day, but look at like the 6 month. down 32.69%. Year to date, 24.4. But the 6 month, I think what happened here is at the end of the day, people are still taking Tylenol. And again, I'm gonna try my best not to laugh, but I did get a kick out of the people that were like chugging Tylenol in defiance. It's like, you know, that you could like destroy your liver, by the way. Like, so I found that like oddly bizarre. It's like, oh, you don't want me to take it? Oh, how about this? It's like, okay, don't drink battery acid either. Um, so yeah, so it's tough, you know. So the perspective that Pratouche mentioned was special situations. You know, if you were at a hedge fund, um, at the end of the day, it really boils down to the actual financials itself. And I'm just going to pull up, since we're already here, the stats on Kenview. So this has been down pretty significantly since, I mean, 331, it had a market cap of 46 billion. I mean, so you're talking about this thing is down, you know, a third. It's gotten cut into a third. Um, you know, PE's definitely come down. Price to sales 2. It's still not like super cheap. Same thing with EV to EBITDA. It's not like single digit EV to EBITDA or anything like that. But I'm curious. I don't know about the leverage. Yeah. So I mean, they got eight billion of debt here. This isn't like, you know, a diamond in the rough. But this is a business where you could lever it up with a decent amount of debt. You know, you see levered free cash flow. So this is after servicing debt of 2 billion. So, you know, you're talking about 2 billion on 30 billion. So that's not that bad from like a free cash flow yield perspective. And that's current. So you can imagine like the market cap before it ripped. So it's up 16.14. It probably was at a free cash flow yield of over 10%. So kind of no brainer, not to mention the fact, you know, to get the Tylenol brand within, you know, a pharmaceutical company that has the distribution and the ability to take advantage makes sense. The problem with those, you know, one-off type scenarios is unless you have some sort of like inside track, it's very, very difficult. I'm not talking about inside information. I'm talking about like, you know, that companies are actually seeking out particular brands or particular like meds, then that's where, you know, you would want to kind of gain exposure. But that one was tough because there was a lot of negativity. I don't think people are going to stop taking it as a result. But, you know, there are instances where it's oversold. You know, would I have taken that bet? No, and I didn't personally. Have I taken bets like that before? Yes. But so there was one that I did when I was working at the hedge fund. It was Knight Capital. They had a flash crash. They lost $400 million in like a matter of minutes. So the stock went from like $20 a share to like 4. The issue was it was all contractual business. So it wasn't like everybody could just leave. And they ended up being bought out by private equity like 2 weeks later. So I started a position. I did research. I'm like, this is stupid. 95% of their business is long-term contracts. And then they got bought out a couple weeks later at $7. So that was like a win-win. That would be an example of like a special situation that I would, you know, move forward with. What do you think about Fiserv? So I've been a fan of Fiserv for some time. When I was at the fund, we actually did own Fiserv. But I haven't looked at it in a while. It's one of those like over time, there's stocks that like get onto and get off of your radar, and Fiserv is definitely one of those. Oh, that's right. So the old ticker was FISV, and now it's just FI. Huh. Interesting. Yeah, down, down, down. Wow. So I don't. Whoa, dude, you got to see this. Hold on. This thing is like a bloodbath of downgrades. So this is where I would have to like dig in. I mean, wait till you see this. This is just like legit bloodbath. Look at the downgrades here. Holy Moses. I mean, this is just like everybody and their mother. Oh, look, there's mom. Downgrade. Um, So the last time they had an upgrade was July, and then just like everybody's pooped all over them. I mean, you're looking, this is pretty significant here, folks. So the price target seems to be like 80, give or take, 80, 81, 79, 80, 80. Okay. And then go back to a week prior. This is where you have to say to yourself, step back. What's going on here? Something doesn't make sense. So Wells Fargo initiated coverage at 130. Citigroup initiated coverage at 128. Okay. So let's put those two data points off to the side. And now they've gotten downgraded by everybody. Now, interestingly enough, Citigroup and Wells have not ended up doing like an update here, which is very interesting, by the way. I guess because they're like, yeah, we initiated. But if these two very reputable firms initiated at, let's call it 130, and everybody else came out and downgraded them at 80, something's going on. And it's pretty significant. Now, do the math. 650 and 650 is 13. 13 on 65 is 78. So if 80 is the true value, it's at a 20% discount. But something significant happened here, which would lead me to like pause. Because you can't have it where it doesn't make logical sense where you've got like two companies coming out 130. I mean, this thing has fallen off a freaking cliff. I want to see what the hell's going on here because this is just like bizarro world. I mean, for something to come down like this, it's got to be like financial impropriety or something. I mean, this is just like bonkers. So let's first look at, bear with me a moment. I have to go back to sharing the Yahoo screen that I pulled up here for Fiserv. I mean, this is just like, what the heck is going on here? Digital payments, yeah. So Fiserv's only bear is a 26-year-old analyst who beat Wall Street. What the hell does that even mean? Okay, let's go back a little bit. I mean, this thing fell off a freaking cliff. Holy crap. I mean, they went from 123 to, no, that can't be. 1028. It was 120, and now it's 65? What? Dude, this is like, what the hell's going on here? That is just bizarro world. Now we're going to use ChatGPT. What happened to Fiserv? Yeah, I'm going to, what happened to Fiserv stock? All right, I'm gonna share this real time. We'll see what AI says. Bizarro. This thing has gotten freaking kicked in the face. Yeah, my new tab. Here we go. What happened to Fiserv stock? AI. Oh. After missing quarterly estimates and significantly cutting its growth outlook, Fiserv experienced a record-breaking 44% crash. Holy crap. CEO Mike Lyons attributed the issues to prior internal mistakes and overly ambitious targets, prompting a critical and necessary reset that included a management shakeup with a new CFO and two Look, when something like this happens, I run the other way. I'm not joking. Revised guidance, drastically lowered its full year guidance, cut its organic. Holy crap, guys! It cut its organic revenue growth from 10% to 3.5 to 4%. Okay, lawsuit, class action lawsuit, inflated growth figures for Clover. We had Clover, by the way, at the pizzeria. I was not a fan. Deteriorating economy in Argentina. What? What is that? What does that have to do with anything? That's bizarre. Multiple investment firms downgraded the stock, slashed their price targets following the announcement. Difficult to explain, harder to defend. Yeah, that's one where I would say I'd stay away. I'd stay away. That's scary right there. That's really scary. I can't like wrap my head around it. Yeah, so I'd be really careful with that. I wouldn't touch Fiserv with a 10-foot pole. It's one of these things like, will it get better over time? Perhaps. But you really have to dig into that and find out what's going on. Class action lawsuits. You have to understand, like, for a stock to go down 44%, like, outside of overt fraud, that's like very, very rare. Either fraud or like we're going bankrupt, 44% for a quarterly earnings miss is just like crazy town. So yeah, that's like that legit would scare me as an investor. And thank God we haven't covered that stock or invested in it. But again, like a couple of firms did initiating coverages a week ago, and this just goes to show like there's certain things that you cannot anticipate. There's obviously something deeper going on there that like they would slash their growth forecast that much. That's weird. There's something really weird. And then management shakeup, that would not give me any confidence as an investor in that company. They seem like they don't know what the bleep they are doing. Also, HHH had their meeting and Ackman mentioned they bid on an insurance business. Ooh, I like that. Hearing the news on that early 2026. Good look there, Pratyush. Yeah, HHH. We've talked about it on the live streams, never on the channel because no one searches for it. So it'd be like me throwing a brick into the Grand Canyon. Any thoughts on Marex Group? It has a boatload of debt, but I think they can handle it and their growth has been very good. It seems like an underground opportunity to me. Thank you. I'm not familiar with Marex, but let's take a look at Marex. MRX. The boatload of debt scares me. Just going to be like honest before I even like, I'm a little biased just off the bat with the boatload of debt. Sharing is caring. Here we go. Boatload of debt. Like if you say boatload of debt, tons of free cash flow. I'm like, okay, let's do this. But that's not the impression I got. Okay. 1 year. Huge pop. Went up to 47.50. Came back down to earth. Okay. Pays a dividend, obviously. Let's see the summary. Okay. Yep. Here we go. Price target cut to 40 by Barclays ahead of Q3 earnings. Okay. What do they do? What do you do? What do you do, Marex? What do you do? Hold on. Profile. Let's see what Marex does. Obviously something crypto-ish. Based in the UK. Okay, financial services platform provider provides liquidity, market access, infrastructure services, clients in the energy, commodities, and financial markets in the UK, United States, and internationally. Operates through clearing, agency, and execution market making, so it seems almost like a trading firm. Over the counter, commodity brokering platform. Okay, interesting. Let's see what it says here. Revenue versus... So first off, we have a UK company, so this is the ADR. They've beat the last 4 quarters. That's nice. Somewhat covered. About 9 analysts. So just remember, a firm like this, and I'll check out the stats. A firm like this, it's a financial services firm. You see the market cap, $2 billion, kind of tiny, frankly. You have to look at, do they actually make loans? Now, when you say they have a lot of debt, that makes me wonder if they're a bank. And I personally don't know of the regulations. So look, they're net cash. Okay. So we've got debt of 9.86, but they have cash of 10.7. So I don't care about the debt when you have that much cash, but because it's a financial services firm, it's a very, very different type of analysis. My like curiosity is whether or not it's a bank. If it's considered a bank, it seems like it is. I'm just not a fan of banks in general. Borrow short, lend long. I get that. Um, even SoFi we've covered on the channel. That's kind of like a demographic thing. But it seems like it's a UK bank. And once we have banks and we have, regulations that go with that, et cetera, that's where I'm like, it's typically not a high growth business. And it's also a very, very, very competitive business. So that's something I would be cognizant of, but just be mindful. Like, those are not businesses that are like high growth. We have a bunch of like Mag 7 companies, stuff like that. That's the type of company you buy at a discount, it gets to fair value and you dump it. That's not like a hold forever type opportunity. Just an FYI. Thoughts on Fluor, potential spinoff. So I've looked at them before, industrials space. Let's pull them up. FLR. Here, let's check out the news, see if they talk about the spinoff there. Oh, hold on. There's an article that says activist investors are betting big. Should you? I don't know. We obviously have to click the article. That's a very clickbait headline right there, friends. How can you not click on this? Activist investors are betting big. Should you? Take notes, friends. That's a really good headline. Okay, so let's see. Carl Icahn, Elliott. Yep. Starboard Value. Okay, revealed a 5% stake. Activist fund. Urging to explore options for its 40% ownership in NuScale Power. Ooh, this is interesting. Okay. So they have a 40% stake in NuScale Power. That wouldn't be a spin-off as much as it would be like a divestiture. Its NuScale stake worth billions. Investors are wondering if Starboard's involvement can unlock significant shareholder value. So that's interesting. I wonder how much the NuScale stake is worth. This might be like, this could be a hidden gem. Good catch on you there, Manny. All right. So global engineering, procurement, construction, advanced technology, blah, 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 oil and gas, chemicals. Yeah, they're in a lot of different things. Okay. So shares have been relatively flat. Modestly jumped on the Starboard announcement. Partly offset infrastructure momentum. On the valuation front, geez, EV to sales 0.35, PE ratio of 3. Holy crap. Yeah, very, very low. Yeah, this looks like it's at a discount. Q2 miss. Okay. So stock nosedived 30% after reporting its second quarter in early August. Both pressure and potential. Revenue came in around $4 billion, down 6% year over year. Missing expectations. GAAP net income surged to $2.5 billion, mainly due to a $3.2 billion equity gain from NuScale, not from core operations. Okay, so NuScale. This is interesting. Trevor Lawrence is. I'm having an ADD moment here. He's advertising Everbank, and I actually use Everbank. Huge fan. On an adjusted basis, results were weaker. EBITDA dropped 42%. EPS. Okay, so here's my advice with a situation like this. When you strip out NuScale, is it worth investing in? That's really the question. So the fact that an activist investor got involved is only one piece of the puzzle. What I'd be curious is to what their proposal is. Fluor's LNG Canada ventures progressing smoothly. Okay, that I'm a fan of that. LNG, yes. Cargo shipment backlog remains healthy. Share buybacks. What do analysts think? Hold rating, lower price target. UBS remains upbeat. Citigroup market undervalues the NuScale stake. Yeah, I think what you really have to do with them is strip out the NuScale stake and see like what is left, and you have to value that. I mean, honestly, if you just do a valuation, that's what you're valuing. So I'd be curious with that. And then usually, like when companies take a big activist stake like this, they'll make like an announcement. I'm just curious if they did. Um, Starboard value new stake in flu or stock. Yeah. Okay. Yeah. They be okay. This is what I suspected. They basically want them to sell the position in NuScale. Okay. I would agree. So okay. Starboard believes Fluor's core business is undervalued relative to the value of its NuScale stake. It's proposed several strategies, a sale or spin-off of the NuScale holding. I don't know how the hell you could spin off. How could you spin? I've literally never in the 20 plus years that I've been in finance, Wall Street, ever heard of spinning off an equity stake. This is AI. This is AI hallucination right here. You can't spin off an equity stake. I've literally never heard of that in my entire life. Now, what they could do is sell the NuScale holding, but then what are you doing with the capital that you get from that? Monetize NuScale power. Okay. Multiple ways, such as a sale, exchange offer, a mandatory exchangeable bond. Okay. All right, so what they want to do, Starboard wants them to sell the NuScale stake and then use the proceeds to buy back stock. That would definitely work for sure. The question is the core business, is there anything in the core business? That's an interesting one. Not gonna lie, that's an interesting one. And look, I always like when an activist is like putting their money where their mouth is. They have a 5% stake, so they're not screwing around there. That one's interesting, Manny. Thank you for that. That one's one to dig into. Here's another one. Eli Lilly, Novo Nordisk. Ooh, thought they were meant to be kind of similar, at least in stock growth. They focus on the same things. Have their own. Hold on. Consumer market. Why don't they have similar growth? No, it's not a stupid question. I'm here to teach. Yeah. So, guys, that's not a stupid question at all, Leon. So what you have to do is step back, first things first, and understand companies that are engaged in similar areas, but you have to look at their entire portfolio. So Novo Nordisk has gone like deep into the GLP-1 mimetics. Eli Lilly is going into a different direction. They're kind of focusing more so on like the overlap of technology in pharma, which is something that's pretty interesting. And they're making different like biotech investments related to that. Pharma is a very different bird, and it's easy to value, frankly, because they have patent protection. So you know what you're going to make for a decade or more. They're not going to be high growth companies. They're the types of companies where when you can get them at a discount, you do. But they usually don't trade at a discount. Oftentimes, I find that they trade at a premium, but not justifiably so. And in terms of growth, I think Eli Lilly has a higher growth path. I don't know when you got into these investments, but Novo Nordisk had this like huge pop as a result of the GLP-1s, and then it kind of like also came back down to earth. You just have to be really careful with those pharmaceuticals because it's a limited lifetime that they're going to have it. Also, the GLP-1s is a super competitive space. So what I would recommend, kind of like data centers, all the stuff that's going on with AI, try to think of things that are like one iteration away. So, okay, let's play this out, focusing on AI real quick. So, data center build out. So, companies that build the data centers. So, we found that previously Sterling Infrastructure, STRL, actually one of the best performers of the S&P 500. I think second only to Nvidia. True story. Um, that is something that's going to benefit from all the AI build out, the infrastructure that's required. So water, electricity, which is why all the like the nuclear companies have been doing well. You know, anything that like utility based. Um, Also, what else? Rare earths with chips. So there's a whole bunch of different things that are kind of like tangential. To that opportunity. I would say the exact same thing as it pertains to the GLP-1s and figuring out what's kind of like that second order. There's the first order, which is going like directly into the investment. But I don't know how long people stay on them for. My understanding is it's short term and then people get off of it, and I've heard there's like a rebound effect. So I don't know, like the issue with the GLP-1s, just like stepping back. It's funny, my doctor friend who I was talking to today, we were having this deep conversation on this. You have to understand there haven't been long-term studies on these drugs. Okay, I'm a fan of people losing weight. I know a lot of people struggle with that. I have friends and family members who are taking this, so I understand how powerful it can be. That being said, you will lose both muscle as well as fat. It's a weight loss drug. It does not discriminate, and effectively, what you do is you just stop eating. So I'd be curious as to like the long-term implications of those drugs and what like the effects of those are. I'd be a bigger fan. Ironically, Pratush earlier was talking about Tylenol, something that people take like chronically rather than something that's short term. But Eli Lilly is the one that has the better growth profile of the two companies. Um, but it's definitely not a stupid question. The problem is figuring out what the time frame that they have that protection for. So just because GLP-1s are like in vogue right now, like they've been on the market for some time and the clock starts ticking. So they have to make as much as they can. And then also there's obviously competing ones. So that's what you have to factor in. Like I would want it where they have like a monopoly on a particular drug, or it's something like Coca-Cola where there's obvious competitors to Coca-Cola, but people will still choose Coca-Cola and still pay a premium for Coca-Cola as opposed to the other competitors. But again, you still have to look at the fundamentals and buy it at a discount, especially with pharmaceutical companies, because they rarely trade at a discount. ASML. Yeah, so we've looked at ASML previously. The bigger issue with ASML is that it's in the Netherlands. They do have an ADR, and all their financials are in euros. So it's a little bit challenging to do the analysis. I think right now we have to kind of like step back with AI, chips, all that stuff. Just understand like semiconductor stocks are cyclical. That's a cyclical business, cyclical industry. I think right now, way earlier, someone was like, "Do you think we're in an AI hype cycle?" I think semiconductors are in an AI hype cycle, 1000%, because there's like a limited number that are needed for all these different applications. So yeah, I think we're in a hype cycle there. But just remember that this is a cyclical business. I'm personally curious to see what happens in 2028. All the data centers are built, all the chips are being utilized. Then what? Like that's where I'm curious. I think that's where you're going to see it kind of come back down to earth. Um, but the issue with investing in foreign direct ownership has tax implications. That's why I just don't really get into it. But people have asked about ASML before because of the fact that it's a chip company. They do have U.S. operations that they're building out in response to the big beautiful bill and tariffs and all that stuff. So I'd be curious to see maybe if that changes things for them. View on Meta earnings, would you ever average up in cases like this? Yes. So I bought more Meta after that. I already had a pretty low cost basis, but I topped off my position. Um, Look, I think whenever the Mag 7 in the current cycle that we're going through, when they go on sale, it's not going to be for that long. Meta's business is 98% advertising. And, they came out and said that they're going to put even more CapEx spend than they previously had anticipated. I don't look at that as a negative. Right now, it's an arms race. You kind of have two thought processes where it's like go big or go home, and then you have the wait and see. Apple's a wait and see. Ironically, the stock just keeps going up. Can't figure it out. Definitely overvalued. Meta's going hard. Microsoft's going hard. Amazon's going hard. So those are businesses that are all going to benefit from AI, and I think that it'll be interesting to see. How it all plays out, but it's like I don't change my thesis. It's at an even bigger discount than when we did the video. I think I had an 870, either 874 or 847 valuation on it, and that's when it was at 718. So now it's 650. Do the math. Definitely at a nice discount there for sure. So yeah, I topped off my position. This one's interesting. Thoughts on Comcast? So in class, I actually, for my comps analysis, I look at Verizon, AT&T, and Comcast, and I was like, what the heck happened to Comcast? So Comcast is a really interesting one. That one is somewhat baffling, what's going on there. I'm gonna pull it up in real time because that's one when I looked at, I was like, what? Like the PE was like 5. Um, so I didn't watch like listen to the earnings call or anything like that, but that one was kind of like a head scratcher. I was like, wow, this is really like trading off pretty significantly. Um, Okay, so now we can see some of the reasoning here. I'll show you guys. So there's a pricing reset and an increase in competition. They were downgraded by Goldman Sachs. Their investment plans weigh on profitability through 2026. Let's see what Stock Story says. They usually have a good story. Stock Story. All right. Why is Comcast down today? Ratings downgrade, concerns over its broadband business. Wow, that's a massive. Lowered the price target to 30 from 34, 40 from 44. So everybody's downgrading it. Well, Seaport Global going against the grain, neutral to buy. After the company warned it would likely face more customer losses in its broadband division due to rising competition from fiber and fixed wireless providers. That's odd. The stock market overreacts. That is true. What is the market telling us? Biggest move over the last 9 months, 12.5%. It's down 27.5% since the beginning of the year, and at 27.13 is down 39.9% from its 52-week high. Investors who bought $1,000 worth of Comcast shares 5 years ago would now be looking at an investment worth $636.44. This is shocking here, friends. Shocking. Okay. Now, I'm going to give you my hot take on Comcast. So, Comcast is running into what a lot of the traditional cable providers are running into, and that's the fact that you, me, all of us have a Fire Stick and Netflix and streaming platforms, and I think the traditional cable is going like out of style. And if you think about it, if you have a wireline phone it's probably 25, $30 a month. Internet, probably 50, $60 a month. So, and that gets bundled. So it's probably 70, $80 a month. Where they make their money is cable. Okay. That's going to be like $150 a month. So that's really where they make their bones. And that's where they're facing the most competition. So I would say that would be my take on Comcast, is the fact that all the media is now super competitive. I mean, just think about yourselves, okay? Like real talk. Just think to yourself and do like a quick poll of your friends. How many people watch like traditional cable versus streaming, binge watching, etc.? I think other than sports, most of us do like the streaming, binge watching, and that doesn't require Comcast. So I think that's a lot of what's going on there. But that is a demographic trend that doesn't appear to be changing. So that's what I think is going on with Comcast. AT&T has actually done well because that was trading in the dumps for a while, and then Verizon's trading at a discount as well. But I think all of them are significantly under attack because of streaming. I think that's really what it boils down to. And I broke it into the three pieces. The biggest, most valuable piece to them is cable. And that's the exact thing where there's the most competition. I know a lot of people that cut the cord and they just stream stuff. Obviously, YouTube is something that you can use to stream. So there's Hulu. There's so many other things out there. I think that's the ultimate issue that they're having. David, long time no live stream. Just out of curiosity, what happened last live stream? We suddenly missed you. Yes. So 2 live streams ago, there was a nor'easter. So that's what happened there. I was literally like stuck in an airport, so I couldn't live stream. Then the last one was actually, I was subject to the AWS outage that happened to all of these different companies. I was like, oh, that stinks for them. And then it hit this Riverside. So I started streaming. I had like 2-3 minutes in, and I was like, wow, there's like no comments coming through. So I went for 45 minutes, and it only actually saved the 2 to 3 minutes, and then the rest of it was gonzo. So that's what happened. It was weather and then technical difficulties. So we're back. And then I'll hit up your other thing. I'm buying Meta and Adobe this week. Not bad decisions there, my friend. I have done the same. So you are in good company. You're definitely in good company. Thoughts on the J&J Ortho spinoff? So it has been proven through research that spinoffs outperform. Okay. This is something that was covered in depth by Joel Greenblatt. I've covered him previously on the channel. He wrote the little blue book that beats the market. And also you can invest like a stock market genius. It's a yellow book. Again, I've covered it previously. In that book, he actually touches upon the fact that spinoffs outperform. I want to see if I can actually find it in real time. Research that spin-offs outperform. Yes. Okay. Let's show it, kids. Bingo. Yeah. So spin-offs do outperform. Research shows that spinoffs outperform their parent companies, driven by factors like focused management, underpricing, stronger incentives. Median outperformance 4 percentage points over the next 12 months since 1999. But then there was another one, Credit Suisse. Okay, this is interesting. So Credit Suisse 2013 analysis from 95 to 2012 found that spinoffs outperformed the S&P 500 by 13.4% in the first 12 months. This is key. In the first 12 months after the spinoff date. And the idea is that it's run more efficiently when it's a standalone rather than stuck underneath a company. And then Edge Consulting Group 25-year study, spinoffs outperform the market by more than 10% yearly. So I think this is the key. I want you to focus on this. 13.4% first 12 months. This 10% over the subsequent 18 to 24 months. So the outperformance on spinoffs is a 12 to 24 month phenomenon, and then it doesn't get any benefit that it originally got. So the idea is that the reason why it's being spun off is that it's not complementary to the rest of the business. So you think about like J&J, right? You don't think about a medical device company. You think kind of like a traditional pharmaceutical company and consumer products. So that's probably one of the reasons why. But I've delved deep into spinoffs as a result of You Can Invest Like a Stock Market Genius by Joel Greenblatt. I think it's a Form 12-5B. So you could actually go, let's see, Form 12-5B spin off. No, 1012B. I apologize. A 1012B. So, hold on. Let's see. Yes. So a 1012B is what has to be filed. So 10-12B as in boy is what has to be filed when a company is being spun off. So if you literally go to sec.gov and search Form 10-12B, you will see all of the spinoffs that have been registered. So that is one that I would check into that, because it is true. I've been aware of that research for a while. Usually, like, I look at it from the perspective of a stock that I've owned, and they're doing a spinoff. Whether or not I'd keep it, I typically would keep it. But that's what the research shows. So I'm definitely a fan. I don't have any specific knowledge about that one in particular, but definitely a fan of spinoffs in general. So it's something I would research and look into. Also, sometimes they get bought out after they're spun off because they're a standalone. But you definitely, and they'll put together financials of the standalone company. But it's a fun analysis to do. So spinoffs in general outperform. You see it, but it's not forever. It's that 12 to 24 month time frame. So just be cognizant of that. Wow. Have you ever looked into Upstart? I don't know if it was you or somebody else actually mentioned Upstart previously. So I remember looking at it previously because someone had actually mentioned it. I don't think it was you, actually. There's somebody else that mentioned it previously, but I know that one has been ripping. So they have the earnings call. It says tomorrow at 4:30. So let me share my screen so you can see what I see. Yada yada. Gaining attention due to insider. This is growing on me. The Yahoo Finance AI. It's gaining attention due to its insider ownership and strong growth potential despite a recent 42.5% share pullback. Analysts are optimistic about future growth, estimating a fair value of $74.69. Wow. Let's see what is going on. Let's check year to date. Yeah, it has come down pretty significantly. High beta. Be careful. High beta, high beta, high beta. Gotta say that. So they're reporting tomorrow after the market. Let's see some key stats here. I want to see what's going on here. It is a little concerning that it's that volatile. No enterprise value. How's that possible? They have no debt and no cash? What's going on there? That's bizarre. Nope, they do. They have $1.54 billion of debt, $400 million of cash, on a market cap of $5 billion. That's a decent amount of leverage there. Ugh. Levered free cash flow. Not a huge fan of that. They do have some EBITDA, but that's a very small amount of EBITDA. So right now it seems like they're in like a growth phase. But I mean, return on assets, return on equity, negative, profit margin, negative, very, very thin on the operating margin. So this one is a pretty volatile one here that I'd be very, very careful with. And it's not exactly cheap. It's trading at 6 times sales even after this big pullback. So that's kind of curious. Again, I'd have to dig into it more to be fair, but definitely very volatile. So just be careful. On the note of chips, Micron has skyrocketed. That's one that Manish Pabrai is a huge fan of. Huge fan. Going back to the spinoff question, does the parent company have negative returns? Nope. Usually what happens is the parent company has solid performance. Sometimes they might maintain some level of stake in the spinoff, typically not. But usually it's looked at as unlocking efficiency because it doesn't fit well. It's not well run, and it's better off as a standalone. On topic of painkillers, Kimberly-Clark's acquisition of Kenvue. When you see a merger of that scale, do you usually start digging into the details? So we actually covered this a little bit earlier. It could be a merger arb opportunity where, if it's an all cash deal, whenever I engage in merger arbitrage, I want all cash deals. So I'm not getting stock. I want all cash. And there needs to be like a significant gap and also a low likelihood that it's not going to go through. That one is one that I think, I mean, it was previously owned by a large pharmaceutical firm, so I don't think that would be an issue. But again, it still has to pass FTC approval, regulatory approval. So it's always, a potential concern. But usually once the deal's announced, then it's basically a merger arb play. The most recent example of a good merger arb play was Activision Blizzard. That was one that was being bought out at 95, was trading at like 70. And Warren Buffett just kept buying into it, buying into it, buying into it. That's one in hindsight I should have bought into, but you only have so much capital. But that's the only thing that I'd be curious about is if it's an all cash deal, then I'd be interested in moving forward with it. And there has to be a significant gap there. But you'd probably play that with like options. And again, you have to be very, very careful because merger arbitrage is a delicate dance and it could go the complete opposite way. So you do have to be careful. But I think contrarian investors might have been, getting into Kenvue after all the negativity over the past few weeks. And then Kimberly-Clark was like, hey, no brainer. And Kimberly-Clark also has the money that they can actually advertise and bring back some positivity there. Manish Pabrai sold all of his stake below 100. Took me by surprise that he didn't hold on. I wonder why. I thought I had read that. Let's see. Why? Because that was one that he had a huge stake in. Why did Manish Pabrai sell Micron? Here it is. Okay, so let's share the screen. Sharing is caring. So he had a big gain on it. He had achieved a 60 to 70% gain on the stock, decided to sell to take profits, citing increased competition, difficulty predicting the future success. So he had a 60 to 70% upside. Too risky and unpredictable. Crazy. First and second quarters, 2023. I mean, now everything is just going bonkers with AI. So you know, I don't hold it against him. I don't hold it against Humanish. Other questions, friends? I got to get back to my my analysis for this week. Um, it'll be an interesting one. I think you'll all like this one. It's a company that I guarantee you've done business with recently. Got to stay hydrated. I haven't had a sip of water in an hour and 40 minutes. Made up for that. I should have been sipping along the way. Any other questions, friends? I'm going to get back to this week's YouTube video. Oh, are analysts baking their valuation methodologies into an AI model? No. That's one of the funny things. Like, everybody thinks AI is like taking over planet Earth. And look, I think at OpenAI, they're seeing something way different than what we're seeing. Okay. But so just so we're clear, AI is an LLM, it's a large language model. Anything that's analytical is like Python, R, and you can bolt on like Python and R into AI. But here's the reality, like, I run training programs for fill in the blank, Fortune 100 company on Wall Street. Nobody's using AI for analysis. They're using it for information, to kind of figure out trends and stuff like that, but they're not building like AI models. It's kind of laughable because like today, I was going through the financials of the company I'm going to cover this week on YouTube, and it's a freaking slog to go through it. I mean, you're talking about each of these intricate numbers. So like a large language model is, think about when your brain reads something, right? Like that is a different function than math. And the way AI works is it's separate. So we have like a feeling brain, a thinking brain, a critical thinking brain, an analytical brain, mathematical brain. So like picture these as like completely separate mindscapes for AI. Like AI doesn't do math. It can like read across, and try to like think of what it would be, but it's not being utilized. I think we're a long ways away from that. And I mentioned this earlier. I have a buddy who's a director at Morgan Stanley Investment Banking, and he said he was at a client and they were talking for 25 minutes about one number. Yeah. So AI, it's a black box. You just don't know what you're getting. That's the big problem. So no, it's just not going to give you the level of depth that you need. So I think from a thematic perspective and an information gathering perspective, it can process a lot of data very quickly. But the actual analysis is still old school. Finance and accounting are not very fast movers when it comes to technology in general. They're more so slow adopters. That being said, a lot of them are developing internal AI models, more so for client conflicts, keeping track of meetings, what's been said to clients, things like that, but not like wholesale analysis. You probably saw there was, I think it was Deloitte Australia. They used AI to produce a report for the government, and it ended up costing them $400,000 because there were a bunch of mistakes and errors. And I've seen that firsthand. I'll do a YouTube video analysis, and I'll say like, note the page where you got the information so that I can cross-reference it. It sends you to a blank page. Like, what? And then it gives a number that's not current. Like that's happens all the time. Like it gives you even say like, this is the most recent filing. Look in this filing, and it'll still pull stuff that's incorrect. Because again, it's a large language model. It's not an analytical, like a numerical analytical model. Oh, we're back to our boy Manish. He's currently invested in coal and offshore drillers, but his percentages are overstated because he has outside USA companies. I am a big fan of him as well. Dondo Investor. Very good book. When an analyst gives a price target, is it based on a 3 to 5 year time frame? No, it's a 12-month price target. Targets are always 12 months. And they're updated every time a company reports on a quarterly basis. So whenever you watch like one of my videos, that's a 12-month target, but it's subject to change based on, the next time the numbers come out. So like Tesla, the price target went up pretty substantially since the last report of its numbers. But it changes over time. Let's see. Yeah, we were talking about this earlier. It is just bizarre. PayPal is a very head scratcher because it was weird. Like the morning of, like pre-market, it was up like over 10%. And then it was just like, yeah, it's like there's a lid on the stock. It's very strange. And, raised guidance, raised estimates, paying a dividend, all sorts of like good news after good news. And just so, but that's a classic, value investment right there, where you look at it on a cash flow basis and it's definitely at a significant discount, but there's just something, I don't know, something weird there. But over time, I mentioned this earlier. Benjamin Graham, who was Warren Buffett's mentor, said over the long term, the stock market is a weighing machine. Over the short term, it's a voting machine, meaning in the short term, it's all about market sentiment and feelings. Over the long term, it's earnings and cash flows. That's the only things that matter. All right, guys, I'm going to cut it here because I have to get back to this week's video. So don't forget to tune in for that. I will give you a heads up. It is a company that you've definitely consumed probably very recently, especially if you are in college. And I'm a huge fan of what it produces. And the stock is down significantly. And it's been on the radar for a while. A lot of you have asked for it. So I'm man of the people. I'm going to produce it. So I think you can guess what it is that I'm going to be doing. So Friday, 6 a.m., be on the lookout. It'll be a very scintillating analysis, but I'm going to get back to it. Glad that we had another good live stream, and I will see all of you same time next week. Later, guys.